Hello and welcome to your weekly installment of the GoNoGo Show. Today is April 18th, 2024. My name is Tyler Wood. I am a CMT charter holder and joined as always by the Chief of Charts, Alex Cole. How you doing, my friend?
Doing very well.
Nice. It was spring up here earlier this week. Today we're back to winter. And trying to shake a little bit of I don't know what the kids are bringing home from school these days, but this episode is brought to you by Dayquil and Strong Black Coffee.
Yeah,
Let's
we had a few 75-degree days this earlier in the week, and then now it doesn't feel quite like that.
Right. Not so dissimilar from the markets that were showing us lots of green shoots and suddenly getting a little stormy. Let's talk a little bit about this asset class heat map. We're looking at the absolute trends across the major asset class groups. Talk to us about what we're seeing on this heat map here, Alex.
Yeah, the obvious change, of course, is equities. You can see that we started this week with some uncertainty, first amber bar in a long time. Followed that up with a weak pink NoGo bar, and the last couple of days have been painting stronger purple. So that's, of course, the panel at the top here, and you can see that that lines up with what we've got in the price panel. We've got the S&P with the spider up here in the price panel. So equities have rolled over into a NoGo trend. That's the big change. Everything else we're seeing is the same for this week in that we have treasury bond prices in a no-go. Of course, that means that treasury rates, we'll look at those in a little bit, moving higher. Commodities holding on to their go trend. They've been a relative outperformer. We've looked at those last week and into this week. And then the dollar, of course, remaining strong, painting those bright blue bars. So we've got a lot of macro factors and we'll talk about this as we go through the show, but perhaps lining up to tell us that there may be some troubled times ahead for the general equity market.
Absolutely. Let's turn our eye to the full go-no-go chart of the S&P 500. Obviously, that's top of mind for a lot of investors who have been watching this week for a potential buying opportunity in a pullback or a counter-trend correction. As we're looking at a go-no-go chart, top panel price is looking at our trend model, those blue and aqua bars in a go trend condition, meaning all of the various indicators blended in the background are pointing for probabilities of a trend higher. That rotation through the colors, amber being our go fish bar, the neutrality of all of the indicators blended into the model, and now switching into a downward trend trajectory, the trend conditions going from a weak form to a strong form yesterday and today. And then, Alex, let's talk a little bit about what's happening in the lower panel. You've got that area highlighted where we broke below the zero line on the oscillator. Talk to us a little bit about what negative momentum in a go trend means.
Yeah, I think you hit the nail on the head. And when you're in a strong trend, you're looking for those opportunities to enter, right? Or to scale into positions to perhaps to gain alpha, outsized alpha from just participating in the trend. And that's what you're looking to do throughout a move. What technical analysis in general allows you to do is to sort of quantify whether or not a pullback is a little bit too much or whether it's a healthy pullback in an uptrend, like you said. And as soon as we saw this oscillator breaking below zero, that's a concern. When you have a trend in place, you want to see the oscillator staying on the side of the trend. So that means for us at or above zero, and every time it comes down to the zero line, we look to see if it finds support. And of course, the last time it did that here in mid-March, we found support and we were able to say that we saw signs of trend continuation. And of course, then we got to one more higher high. Now, the last time we saw the trend come back, we saw the pullback in price as we fell away from these highs. We did the same thing. We watched to see if the oscillator holds the zero line at support. Of course, it didn't here. A couple of bars before the trend color change, we found it broke into negative territory. It retested the zero line, this time from below, and then it fell back into negative territory, which of course is a worry for the go trend. And then very quickly, then we found the amber bar, which means that the market is displaying some uncertainty about the go trend. We know that when it's amber, that means that there aren't enough conditions being met in either direction for us to identify a trend. So we paint the bar amber, and then quickly we rolled into a weak no-go, and then, like you said, a couple of stronger no-goes, and now momentum is clearly in negative territory at a value of -3, not oversold yet, and the no-go trend is in place. So at the moment, NoGo trend. Momentum is confirming the NoGo trend by being sort of clearly in negative territory.
Absolutely. That's how we read GoNoGo charts. The last thing to point out within the GoNoGo oscillator in that lower panel, we like to incorporate volume. And for us, relative volume is very important. So when we see that acceleration to the downside, did briefly reach an oversold extreme on heavy volume. And we've seen momentum pull back to a -3, but still in negative territory, giving some credence to this NoGo trend. Now, if you've been with the GoNoGo show, if you've been watching Alex and I for the last few years, we don't predict what the future holds. Certainly, this could snap right back into trend. Maybe it was an aggressive sell-off, and we see a ton of buying at these levels. We don't predict what the future may hold. But from a risk management perspective, when our model is signaling that we're now in a downtrend, we're not going to be allocating to equities in that same fashion. We want to at least lighten up, underweight those positions, or even look for short opportunities. So that's the way that the model works, and the way that the charts are displaying all of that powerful technical information. Alex, let's take a look at yields. The TNX, we can see that it's a bear market for Treasury bonds as rates are rising. These are moving inversely. And we seem to be striking a series of higher highs and higher lows. Talk to us a little bit about the trend in 10-year yields.
Yeah, it was a little choppy as it started, and of course we know that, being students of technical analysis, that beginnings of trends are often ugly. Elliott wave theory tells us that, but we can see that we have emerged out of the period of chop. We've set those, like you said, series of higher highs and higher lows, and now finally we are above zero, finding support on the oscillator as GoNoGo trend shows continued strength. So strong blue bars, oscillator at a positive value of 3. Of course, we did come out of overbought territory, so that tells us in the very short term we may struggle to go higher. But this is a strong looking chart now with a series of higher highs, higher lows, GoNoGo trend painting bright blue bars, and the oscillator in positive territory.
Now, of course, we're looking at daily time periods as this is a weekly show. We want to make sure we can show you the changes in the markets from week to week. If you're a longer term investor, your time frame might be wider than this. And so let's take a look at a chart of the TNX on a weekly basis, where we are seeing also go trend conditions on those weekly bars, but in the weaker form of the trend conditions, and not yet regaining prior highs from October of last year.
I think as long as we sort of stay below these prior highs, the equity market might not get as spooked as you might think. And so that's important to note. Having said that, we did see this break of a max go-no-go squeeze. So we haven't talked about the squeeze much on this show yet, but when the oscillator gets stuck at zero, that tells us that there's very little directional pull in either direction. And so for every bar that the oscillator stays at zero, we allow the grid of the go-no-go squeeze to climb to a max. And that's sort of representing or visually reflecting a tug of war at these levels. And so as we see the reduced volatility, when that is broken, that is often the sign of a significant move to follow. And so we can say that, yes, we are below these prior highs, but we're in a go trend. Momentum is broken out of a max squeeze. We're in positive territory. So perhaps we'll make an attempt to test these prior highs from the end of last year.
Absolutely. So let's move on from this look at the Treasury yields. Let's also take a look at the U.S. dollar, providing a few other headwinds to risk assets and U.S. equities in particular, breaking above those prior highs and establishing a fresh breakout in a go trend on strong blue bars. We've got overbought momentum here sitting at +5. Certainly not helpful for the bull's case in risk assets. And let's pop this out to a weekly basis as well, Alex.
This one actually is a weekly basis, so we'll stay here for the moment.
Fantastic.
And we talked last week about this, how important and significant this bar was. This last week's bar, looking at this chart, broke above the previous highs, and also the highs not on a closing basis, but the highs from last October. And what we look to be doing at the moment is just consolidating at these levels. So definitely a breakout. We can see higher highs. We see strong blue bars, lots of momentum. As you said, we're in overbought territory. And if we bring this down to the daily chart, you can see what a move that was. A quick move higher off new highs gapping several times last week as we found support at the zero line. So a strong looking chart, new highs, strong blue bars. Definitely we're in overbought territory, so we may expect some kind of waning of momentum if this falls into neutral territory, but definitely some strength in the dollar on both time frames.
And we're using UUP, which is an ETF proxy of the dollar index, just so we can also get a sense of volume trading at these levels as well. Overbought on heavy volume, certainly a strong trend in the US dollar. Alex, let's take a look at oil and just take a glance before we move into a lot of other commodity groups, as we will later on in this show. Pulling back a little bit from those prior highs.
Yeah, commodities has been such a strong area for investors over the last couple of months, and you can see that here on the chart of oil. Series of higher highs and higher lows, oscillator finding support and staying above the zero line. What a huge max squeeze this was that finally kicked off or allowed price to kick on into this strong go trend. Well, a moment of inflection again now, Tyler, as you said, we pulled back. We're still in go trend, given that we're painting weaker aqua bars. You can see that we're probably finding a little bit of support from prior highs, as you can see the line, this lining up here with the high from March. And if you look at the oscillator riding the zero line again, so we'll want to see if the oscillator continues to find support at zero. As long as it stays at zero or rallies back into positive territory, we'll probably see this trend survive, at least for the foreseeable future. If the oscillator breaks down into negative territory, that, of course, would be a concern, and we may see price continue to drop. But at the moment, go trend in place, oscillator riding the zero line. We're seeing a bit of a squeeze build, so we'll watch to see in which direction it breaks.
Absolutely. Now, looking at all of these sort of intermarket analysis plays and understanding what are headwinds or tailwinds for the equities markets, one other chart we should take a look at this week is the VIX index, $ VIX on stock charts, and that'll just give us a sense of sort of the market dynamics where we had been in a period of low volatility since late into the fall, really correlating to that strong bull run. And we've seen a change in the characteristic of the VIX these last couple of weeks. Obviously, the correlation between the VIX and downward trends in equities, not a perfect one-to-one correlation, but we often see when the markets get spooked and there's selling, some higher volatility regimes come into play.
Absolutely.
Alex, from a trend perspective on the VIX, we'd be looking at some overhead resistance back up near the 23 area.
Yeah, I mean, even a little bit lower. We're sort of 20, 21, 22 in here. But again, historically low volatility. So, volatility around 20 and below is typically a good thing. But we are seeing the beginnings of a change, as you said, some higher highs, volatility popping up a little bit higher here. So we'll see. I mean, it may well be that we get up here where we were in the fall and it rolls over. Equity markets just suffers a small correction and then goes back into a go trend and goes higher. But if we see volatility continue to climb, then of course that might be indicative of something a little bit more damaging.
Absolutely. Now let's turn our eye back to the equity markets. As Alex and I do scans daily, looking at go trend continuations, looking at some breadth studies. We have seen the characteristics change dramatically over the last couple of weeks in terms of where buying opportunities exist and how many new short selling opportunities have been creeping up. So let's take a look at the sector rel map of the S&P 500. Looking at the leadership groups by sector on a relative strength basis. So this is each sector relative to the S&P 500 benchmark. Now that we are in a downward trending environment for the S&P 500, we can see that the leadership groups are largely holding up within the cyclical sectors. We've seen communications come back into a period of outperformance. But I do note the utilities outperformance here in this heat map is certainly a defensive signal from the market.
And we just tend, you like to see important information line up to give you sort of that hopefully intelligent understanding of what's happening. And so when you add the fact that we were talking about rates rising, we're talking about the dollar rising, we're talking about We didn't even look at the gold chart, but you're talking about gold being very strong, and often gold is a flight to safety. You're talking about all these macro factors that may be weighing down a little bit on equities. And then you see that the utility sector is starting to outperform. Now you're starting to really build that case for perhaps a struggle ahead in equities.
Yeah, near-term defensive posturing
Yeah.
is probably the best way to characterize this. But Alex, you're a big Jimmy Buffett fan, I hear. It's 5 o'clock somewhere. There's always a trend somewhere, right?
Absolutely.
And so when we're looking at a relative strength heat map like this, we can see that energy, industrials, materials still outperforming the S&P 500 and giving us some potential charts to look at. Let's switch over one more time to the commodities realm map. You mentioned gold, and we looked at this last week. In terms of a trend being somewhere, it is clearly rotated in favor of a lot of the commodities markets. And this heat map goes through a wide and diverse basket of agricultural products, precious metals, industrial metals. Of course, the energy complex is in there, things like lumber outperforming. One of my favorite ticker symbols, wood. And so when we see these characteristics of commodities outperforming, it doesn't mean that we can't take action with client portfolios to make sure that they're on the right side of trends. And so seeing this outperformance certainly spells some opportunity, as well as we were looking at the materials sector of the S&P 500.
Absolutely.
So let's pull up a chart of the XLB. It's the spider ETF representing the materials sector of the S&P 500, where we could see great outperformance of the market, but again, that's a relative basis. So it has also been weighed down by the last few days of trading. Alex, talk to us a little bit from a trend perspective, what we're looking at here with the.
Yeah, I mean, like you said, there is outperformance on a relative basis, but you're going to have to be careful at the moment, because you are seeing some weakness in the trend. Remember, the S&P was in a no-go, right? So relatively, we're outperforming here. We're seeing a weaker aqua go trend giving way to a single amber go fish bar. Momentum is in negative territory, so this will be interesting to see where we go next. Do we recover go colored bars? Does the oscillator climb back towards the zero line, or does it follow the S&P lower? So I think that's the important thing to look at as we watch something like the materials.
Absolutely. And in our top-down process, right, we want to get an understanding of the context. We want to see what's happening at the index level, the sector level, and then let's dive into the industry groups that make up this material sector, Alex.
Yeah.
And what this heat map is showing is all of the industry groups within the material sector and their performance against the sector itself. So that downward trending and now neutral XLB, these are the areas of leadership and laggardship. And in the bottom four panels, we could see where our leaders are. Alex, talk to us a little bit about what investors could be looking for from outperformance.
Yeah, I mean, so there's outperformance in the materials sector, but you don't know where it's coming from until you get into something like this. And when you look at the XLB itself, you see the neutral amber bar, and you sort of wonder whether there or not there is enough of a outperformance for you to be looking for opportunities. But when you jump down into the subgroups, you can see that the outperformance in the materials index is being driven by these bottom four panels. And we're talking about metals, we're talking about aluminium, we're talking about non-ferrous metals, and we're talking about mining, gold mining, regular mining. So that's where the outperformance is. It's in metals and mining. And so that really can then lead you to finding those individual opportunities for tickers to look at. So we've gone from a really not a good looking chart at all of the S&P to a chart of the XLB that's outperforming but looks a little neutral, to now dropping down to these industry groups where there perhaps are some real outperformance opportunities, and that can fly in the face of what the market is doing in general. And if you can get some differentiation, then that's always a really, really good thing.
Absolutely. We want non-correlated returns. We want to participate in those areas of the market that are trending and outperforming. So let's move our lens to some individual equities for our listeners here this week. Let's pull up a chart of a gold miner, Harmony, HMY.
Yeah, so this is a great chart. We talked about this one yesterday, you and I, Tyler, and this is exactly what we're looking for. We're looking for those opportunities that perhaps exist to give us that separation from the rest of the index. And that's what we've seen here. We saw a trend in place, higher highs, higher lows. We saw a fall away from recent highs. And then you look at the zero line to see if that zero line provides support. And yesterday it did. That's what we were talking about yesterday. We noticed that we found support at zero. We bounced back into positive territory, and that gives us this trend continuation icon that we're talking, the green circle here on the price bar. And today we're up from yesterday's close. So yes, you can still sometimes find these opportunities that fly in the face of what you're seeing from an index perspective.
Absolutely. And on that commodities realm map, we saw it wasn't just precious metals, but also industrial metals. Copper has been on a tear. Let's take a look at Freeport McMoran, ticker symbol FCX, for another opportunity to the long side.
Yeah, and this one's interesting because not quite as far advanced as we saw there for Harmony. We're seeing this one sort of setting up potentially to show us trend continuation. So this is a good one to watch over the next couple of days. We saw the new trend. We saw the higher highs. We saw the higher lows. We've seen the weakness as we've fallen from this most recent high. And now we're looking at the oscillator riding the zero line. So we will pay attention here. If the oscillator can rally back into positive territory, that will tell us that we're seeing signs of trend continuation, because we'll be able to say momentum is resurgent in the direction of the Go trend. So that's what we'll be looking for here. If we can get that bounce back into positive territory, we'll see signs of trend continuation and that green icon appear on the chart.
Absolutely. We also talked a lot last week about the energy complex, and so let's take a look at Marathon, MRO. In terms of the exploration and production of oil, a little different characteristic here as we're breaking the zero line on the GoNoGo oscillator.
Yeah,
Talk to us about this chart.
This is exactly what we were talking about yesterday. As we came down to test this zero line, the question for us is, does it hold and find support? Not a great sign today, right? You can see how this is quite a sharp correction, so that's not perhaps surprising. But we had a really good run. Strong blue go bars as we went into these recent highs. And then we watched the oscillator fall to the zero line, and we would look for that support. It didn't happen yet. So now we're going to be careful. We're watching to see if the oscillator retests the zero line quickly, or if we continue into negative territory, which would then potentially lead to GoNoGo Trend changing colors in the price panel above.
Absolutely. Obviously, this is going to be highly correlated with the price of oil, and we saw that weakness on the oil chart earlier. Alex, let's switch gears for a second. There are all these mining companies around the world, but the young kids are doing some digital mining. And I want to just quickly reference Bitcoin and the cryptocurrency craze that was taken over here at the end of February and into March, breaking that 60,000 level. The cryptocurrencies are not immune to pullbacks either. Talk to us a little bit about what we're seeing here on this chart of Bitcoin.
Yeah, absolutely. I mean, it's just very technical. You have these strong go trends that move price forward. You've had some no-go trends that have, in this case, took price really sideways and then back into a go trend to new highs. And we've been watching Bitcoin for a couple of months. You know, the thing that strikes us is that the fervor that surrounds Bitcoin is interesting. And when we hit these highs above 70,000, people are like, oh, now we're going to 200,000. Yeah. Well, it doesn't always work like that. Even if it does get there, it doesn't get there in a straight line. And so as price hit these highs and we saw counter trend correction icons, these red arrows, we then watched price move mostly sideways and slightly away from those highs. And we looked at the oscillator to see whether or not it would continue to find support. It tried, it struggled, it found support a little bit as we held on to the go trend. But you see the weakness come in, you see the uncertainty in these amber bars. And then, of course, right here, we break below the zero line on heavy volume. We see a couple more amber bars follow, and then the no-go trend. So, you know, doing what it does really technically, in that we've seen the trends, we've watched them roll through their colors. We see momentum come out of the trade. We see volume pick up as the price moves lower, and the no-go trend now in place. Now, there is some support around here, as we know, around 60, 61. And so, yes, you know, today we're trading back off that level. So we'll see, but now we might be looking at the zero line as a possible area of resistance on the oscillator. So we'll watch what happens as we go forward.
Absolutely. Let's take a look at this on two more views. First, let's look at the weekly chart. And for those of you who are maximalists or longer term investors, simply a pullback within trend, haven't even reached the zero line here on the weekly basis, and still above those prior highs from 2021. Now, if we look at this on a intraday chart, like a 39-minute chart, for those who trade much shorter term, we've already found support and we've re-entered the Go trend. The important lesson here for everybody is that we need to pay attention to multiple time frames to have some context for the moves that we're seeing day to day. But also, if you are short term, any technical indicator should be calculated in the exact same way on every time frame, and that's very true for GoNoGo charts. So if this weekly piece for you is extremely long term and you're used to trading intraday, you could still use these tools to your advantage to stay on the right side of trends, no matter what your time frame is.
And I think, Tyler, for me, the one thing that multi-time frame analysis, when it really resonates with people, even whether they're in the retail space or not, is the ability to draw some confidence from your own opinion, right? So we always say we try not to have opinions, we try to just follow the charts. But if your opinion is to go long, then at least go long when there is some technical validity to that. And so if you're looking at this pullback in Bitcoin as somebody that wants to take a long position, then let's find a reason, and perhaps that reason is towards the lows here as the oscillator breaks back above zero on the 30-minute chart. That would be a sensible time for you to drop down in trend and maybe enter. Now, it depends, of course, like you said, your risk parameters, your time horizons, and what you're looking to achieve. But giving a technical reason to do something that lines up with your thesis is streets ahead of just having an opinion.
That is so well said, Alex. I had a webinar yesterday for a bunch of bank treasury professionals outside the US, and we talked endlessly about the inextricable link between fundamentals and technicals, and obviously having a macro lens or a fundamental toolkit to provide that thesis. Waiting for the market to agree with your thesis is the best way to maintain profitability and stay out of those risky downtrend situations. From us at GoNoGo Charts, we appreciate you guys tuning in every week. Check out more of the educational content here on the GoNoGo Charts YouTube channel, or head over to our website, GoNoGoCharts.com. If you have any questions about using these tools, about different platforms that you might be on, by all means, reach out to us, info@GoNoGoCharts.com. Thank you so much for being with us this week. I'll see you later on Dave Keller's The Final Bar on Stock Charts TV. And Alex and I will be back with you again next week. Until then, stay healthy and trade them well.